Good morning, it's Jeffrey Christian of CPM Group. It's about 9:25 in the morning on Friday, the 8th of July. The employment figures have come out and they were stronger than the market consensus. Not that that means anything because I don't have any respect for the market consensus on employment projections, but the economy is showing some greater strength. That has suggested to financial markets that interest rates might be a little bit stronger than they had been expecting earlier in the week, and that has been reflected in lower gold, silver prices, stock prices, and other things. I want to talk today about gold and silver being good and important investments, because they are. And I think anybody who's been listening to these things know that CPM Group says they are. And I want to say that because there's an increasing frequency of commentary. There's a chorus of comments of people saying, hey, I'm really getting disillusioned with gold and silver. And in preparing for this, I was looking at some of the videos, presentations, the PowerPoints that we did in late last year. In December 17th, we did a thing called How to Effectively Invest in Gold and Silver, Part 1. And then we did a thing, What Have We Learned in 2021. And then in January, early January, we didn't call it Part 2, but it was How to Effectively Invest in Gold and Silver, Part 2, like on January 4th. And I was looking at these and I thought, boy, I can copy a lot of things. And I was looking at them because I wanted to copy some slides, which you'll see later. But yeah, we started the year with a lot of people talking about $10,000 gold and $1,000 silver and the destruction of the dollar, et cetera, et cetera, et cetera. There's a lot of things that hadn't happened in 2021, and they haven't happened in the first half of 2022. And there's a lot of dissatisfaction. We're hearing more and more commentaries about, hey, I'm still bullish on silver, but I'm so tired, I'm sick of people talking about how paper markets are manipulated and how silver prices really are higher and the dollar is going to collapse and the United States Treasury is going to collapse, et cetera, et cetera, et cetera. And it's good to be fed up with that and to walk away from that. But you should not get fed up with that and walk away from gold and silver as good investments, because gold and silver are good investments and they're very important investments. Despite all that noise, despite all that stuff that's just marketing hype and stuff that's spewed out by true believers who think that it takes a gold standard or silver monetary rejuvenation to restore ethical and moral America. Despite all that noise, gold and silver are very important to have in your portfolio and to invest in. They're very important as wealth numerators, part of your wealth, part of your portfolio, a diversification of your assets. And they are also very important as wealth denominators because they compete with the dollar or whatever your domestic currency is as a denominator of your wealth. And a lot of people say, and we say sometimes, well, I don't look at gold and silver as investments. I look at them as money or quasi-money, i.e. what they mean is I'm looking at it as the denominator of my wealth, not the numerator of my wealth. And the reality is that gold and silver are both numerators and denominators. It's very important to understand that they really are effective. We've seen gold and silver prices fall sharply over the last week or so. We're seeing the market consensus across financial markets tack into the wind, if you will, with a sailing metaphor. We had a first half of the year which started off, oh, we're going to have high inflation, and that's going to push gold and silver prices higher. then it's like, oh, yeah, high inflation is going to lead to high interest rates, and that's going to throw us into a recession. And then we're going to have deflation. And a lot of this is covered in great detail in our July 7th Precious Metals Advisory, which came out last night around 6 p.m. New York time. And we have a discussion about the first half of the year and how you're seeing the market consensus change. So we've gone from high inflation, high interest rates, recession. Now the financial market consensus is tacking, and they're saying, okay, maybe inflation is coming under control. We've seen core inflation come down in April and May. The June figures late next week, and they'll probably show that yes, inflation actually is calming down for all of those reasons we've bored you with for the last 12 months. And that means that interest rates probably will continue to rise, but they rise as much as some people have feared and predicted. And they probably won't rise so much as to throw us into a recession. So we'll probably see high inflation, but not higher inflation, and higher interest rates, but not that much higher interest rates, and lower real economic growth. Yeah, we're adjusting our 10-year projections of real economic growth right now. And it's weird because 2022 has come in weaker than we had expected by somewhat. We were on the pessimistic side for real GDP to begin with, and we've lowered our 2022 projections. But when it comes to 2023, we had extremely low real GDP across the globe. And we're looking at the IMF, the World Bank, and the OECD, and then other real economists, not the crazies who were talking about, deflation and the biggest depression since the Depression, et cetera, but real mainstream economists who know what they're talking about. And they have been lowering their 2023 real economic growth projections, but they're still not as low by a wide margin as we were projecting in the first quarter of this year. So we're not lowering our 2023 projections because they're already really pessimistic. But it's still marginal economic growth. It's not a recession in the second half of 2022. It's not a recession in 2023. The real problems probably lie somewhere over the horizon, in our view. And all of that's very important because it means that you really want to have some of your wealth in gold and silver. Now, I'm going to go through some charts that I grabbed from earlier things. This is a chart that the next two charts are charts that we used in our February 4th, 2022 video. And they show the efficient horizon, gold's optimal role in a portfolio historically. And when we say historically, it's 1968 to 2022, 2021. This says 2020, but it's 2021. And it's that period of time because prior to that, gold prices were fixed by government mandates, and it doesn't make sense. But since 1968, the sweet spot is to have 25 to 30% of your wealth in gold. The rest, stocks and bonds and other assets. But in terms of your investment portfolio, 25 to 30% has been the sweet spot over the period of free gold prices. Silver is far less dramatic, but it's still positive. And the sweet spot is basically 5 or 10% of your wealth in silver. And these are bullion. And you can make an argument that you can diversify that into some mining stocks as well. But this is the role of gold and silver over the long haul. And we're long-term investors. We're not short-term speculators, although we have clients who are shorter-term investors, and we help them. But our focus is always the long game. Always defined success in the financial markets is not a hit or 3 hits, but rather a long career of consistently high batting averages. Sorry for the baseball metaphor. These charts, the next 4 charts, are actually from How to Effectively Invest in Gold and Silver, Part 1, from the 17th of December. And I believe both of those videos are available on our website. cpmgroup.com. And these are our intermediate term, 1 to 3 year projections. Should you buy, should you sell? Since December 1980, when I started keeping track of my projections. And you can see from 1980 to 2000, it was buy, sell, buy, sell. About 68% of the time we were saying to people, don't buy gold. If anything, sell it short. November 2000, we issued a buy recommendation and we kept it in place until 2012. 2013, we issued another buy recommendation, perhaps a little bit premature, and that's still in place. And that has given you this tremendous return. You know, if you had invested in gold in December 1980, bought it and just held it long, long physical, you would basically have doubled your money. If you just gone long when we said long and gone into treasuries when we said go short, you would have had a much better return. You know, what is this? 8.9% annualized return. It beats the S&P, it beats the Dow, it beats a lot of other parameters. And if you had bought and sold when we told you, you would have a 13% return. Gold makes sense as an investment if you invest based on facts and realities. You don't invest in faith, and you don't delude yourself or allow yourself to be deluded by others who tell you just buy gold because it's going to 10,000 because the world's going to collapse. These are our silver term recommendations, very similar. We waited on recommending silver, which was probably a wise thing to do. And these are the returns. And again, even higher returns because silver is much more volatile. And we'll talk in the next few weeks about how silver and gold performed relative to other assets in the second quarter. Gold was of this quilt chart that we use, of different 9 different asset classes plus gold and silver. Gold was the third best performer in the second quarter, by which I mean it only lost about 7%. And silver was the worst performer because it's just much more volatile. And it's suffering right now from those people who have gotten discouraged because they listened to guys who said it was going to be $50 or $100 or $1,000 by this time. You know, one of the headlines on December 29th that I used in our January 4th, I believe it was, video was, this is your last chance to buy silver below $30. 6 months later, you can now buy it around $19 if you're buying 1,000-ounce bars. A little postscript. I keep hearing that the ruble is now at record levels. And it's this crazy thing about people, I guess they don't like the US government so much that they feel they have to bend over backwards and support a dictatorial, militaristic Russia. The ruble's around 60 to the dollar right now. This was March or April when it was about there. We're at 60. And you can see here's where Russia invaded the Crimea in Ukraine the first time. And you can see that the ruble was around 30 to the dollar. And it went to about 60, 70 to the dollar. And at 60, it's still not at a record. It's not even at a record for the post-Ukrainian invasion #1. So when someone tells you that the ruble is record levels, you can turn off that channel. Don't turn off your gold and silver investments because people like that are telling you stupid things. Don't turn off your gold and silver investments. Gold and silver are important to investors. And we have a whole program that we're planning to roll out to emphasize this and provide greater education than we've already been providing over the last couple of years for free via these videos. It's very important to stay the course, understand the role of gold and silver in your portfolio, and tune out all that noise that distracts you and can lead you to being discouraged as an investor. Gold and silver are very good for you as an investor. They may not be as good as $10,000 silver or gold, or you will be able to buy a house with 5 ounces of silver next year. They may not be that good, but that's fantasy land. In the real world, they're very important, and you should disaggregate yourself from the fantasy world and focus on the real world. Focus on what you see in front of you that's statistically supportable. Don't believe people who say they were bankers. Don't believe people who say they were CIA agents. Focus on the real world and make money and preserve wealth with gold and silver. We will be launching our Platinum Yearbook July 26th. There'll be an online briefing for that. Information will be forthcoming. We're in the throes of pulling it all together now. That's all I have for now. You can go to our website. You can see old videos. You can download free reports and free reads and all sorts of things. There's a really great section in our market views about silver conspiracy theories and all of the evidence that says, no, there's no grand conspiracy, including evidence about the guy who started that and why he started that. We're working on some interesting things there too. There are also issues, there's a whole section about good data versus bad data in the precious metals market. Go to our website, read up on it, and we'll talk to you next week. Have a good weekend. Be good to yourself, be good to those around you, and be good to those who aren't around you, but they're on the same planet as you. Take care.